edition of Economic Update, a weekly program devoted to the economic dimensions of our lives: jobs, debts, incomes, those for our kids, and those looming down the road. I'm your host, Richard Wolff. I've been an economist, a professor of economics all my adult life, and I believe that has prepared me to present to you the kinds of economic analyses and updates that this program specializes in. So let's jump right to it. For 7 years now, the citizens of California have been battling over the identification of who is contributing to political campaigns. There are those who believe that it is an infringement on the freedom to donate and use your money to be forced to disclose who you are to the voting public when you give money to a candidate. And there are those at least as upset, if you like, who believe that it is everyone's right to know who's funding whom as part of what you need to know when deciding how to cast your ballot. Very recently, the legislature in California, by a supermajority, more than 2/3, passed the California Disclose Act, which is now awaiting the governor's signature to become law. If the governor doesn't sign it, it will not become law unless and until the legislature might override his not doing so. So the people of California, in a sense, are reaching the culmination of a struggle, a dispute, a debate over disclosing campaign finances. My position here is not to urge you one way or the other. That's up to you and whatever decision you have to make. But I do urge you to take this vote seriously, to take this whole situation seriously in terms of your support for one or another candidate, for one or another group, not only because however this comes out will affect the politics of California, but as has happened before, as California goes, so well may much of the rest of the country. The implications are national, and because of the importance of who is paying whom in our political system, the impact is global. So much depends on what is happening now. You can find out what you need to know by going to various government websites that inform you about these issues. There's also a website called cadisclose.org of those who want the governor to sign this legislation. There are groups opposed. This information is readily available. And again, as a citizen of the world, of the United States, and of the state of California, it's a very important issue, and I hope you will cast an informed ballot one way or the other. Let's jump into the updates for today, and the one I want to start with is one that I think is of enormous importance to the American economy and hasn't got anywhere near the attention it should have got. Let me start with the most arresting statistic of all. The number of retail stores scheduled to be closed during calendar year 2017 in the United States is 6,400 stores. That is a cataclysmic closing of the retail sector of the American economy. It means enormous losses in wealth. Think of the thousands of empty stores. Think of the hundreds of malls that are now effectively defunct or will soon be. Malls with enormous investments in buildings, parking lots, roadway schedules, traffic patterns, all of this law. Think of the tens of thousands of jobs, retail jobs, lost to people who no longer go to work in a store that isn't open. Think about the lost opportunities. What else could have been done with these malls if we had known, if we had had some economic foresight, which many people did, if we had done some economic planning, which very few did, we might have been able to anticipate how to make good community use of an abandoned mall, a mall that could no longer function as a store in the lives of the people, the workers, the customers, and so on. I want to drive home what some of these closings are and give you the names, because it will affect you, and you need to know. And the coverage, as I suggested, is woefully inadequate. The biggest single closing scheduled for this year, Radio Shack, plans to close 1,430 stores. Next, the Payless Group, 808 store closings. The Ascena Retail Group. Now, of course, some of these names don't mean much to you, so let me tell you what Ascena is the owner of. Well, I'll mention only two so you get the idea. Ann Taylor, Lane Bryant. Those are parts of the Ascena Group. They're closing 667 of those stores. The Limited, a major clothing outlet, is closing 250. Family Christian closing 240. Kmart 230. J.C. Penney 138. And I could go on and on and on. Your life, those of your friends and relatives, are all going to be affected by the lost tax revenue of the communities you live in as these stores close, by the lost state tax, sales tax revenues, as they're not anymore paying sales tax, since people either now don't buy or buy through internet distributors who can escape many of these taxes, etc., etc. The impact will be everywhere. And I'm not even talking about the visual impact of driving your child to school, passing an empty, abandoned mall with weeds growing up through the cracks in the pavement of the parking lot. This is a catastrophe, economically speaking. It should have been planned for. It should have been developed over time. It should have been made easier for the people immediately affected. We live in an economic system that doesn't do the planning, the preparation. It just lets the chips fall where they may. And please remember, every corporation that made the decision to close these stores explained that their profit and loss situation required this decision. That's what they said. Profit drives the decision. Profit calculations, whether they're right or wrong, is really no one's business, and we'll probably never know. But profit calculations by a tiny group of people led to the decision to close 6,400 retail outlets in the United States in 2017. Let me turn next to another important story, economic update of this week. Housing starts fell 8.8% this last month. It's the second monthly drop in housing starts. Why is this important? It's important because when we start a house, when a builder begins to build a house, a whole set of economic transactions is set in motion. It's not just the people hired to build the house, important as that is. It's not all the jobs for people who are bringing building materials to the building site from wherever they're manufactured. Lots of people. And it's not only the immediately affected nearby communities. What's also set in motion are demands for furniture, because that house will be built in a certain number of months, and then it will be sold, and then it will be occupied. And whoever the new occupants are will be buying new furniture, probably. The house builder or those people will be buying appliances. An enormous industrial boost is given when housing starts proliferate. That's why it's really bad news when for 2 months we not only don't get rapid growth, we get a decline in housing starts. So I looked into it in order to be able to offer you an explanation for why, at a time when the government boasts that unemployment is shrinking, more people have jobs, we're supposed to think, oh, this is a turnaround economy, and then we get this statistic, housing starts drop. Well, so here's the explanation, which the housing industry is perfectly willing to offer, and I'm just passing it on to you. The vast majority of people getting jobs are getting jobs that have little pay, few benefits, and no security. Guess what? They're not going to buy a house. They're not going to go in on the loans and the risks of home ownership with the income situation as precarious for them as modern jobs of the sort that we're giving people actually are. So it turns out that what the building industry is doing is building fewer houses, but much more expensive houses. The housing industry is going where the economy is. And in the economy, it's a shrinking number of very wealthy people who are buying houses because they can, and a growing number of the mass of Americans with or without a job who cannot do that, who cannot buy a home, who cannot raise the down payment, who cannot take the risk of a 20-year mortgage, etc., etc., etc. It's another sign that when you allow the inequality of income to reach the dimensions it now has in the United States, there are consequences down the line from doing that. And one of them is this bad news from the housing market, which is in turn a reflection of the inequality of income and will have effects making that inequality worse. And now another. This economic update puts me in the position of even coming close to celebrating something done by people like Walmart, or Pepsi-Cola, or Viacom, or Target. You can't say Target. Target. Here's what they did. These corporations I just named are among 800 major American corporations who wrote and signed a letter to the Trump administration, urging the Trump administration to reverse its decisions about the DACA young people, the DACA, those people who were brought into the United States illegally as children, young children, and who have grown up as American children, and many of them have jobs now and so on, and they are threatened with being pushed out by what the Trump administration and the Republican Party at least has talked about. It's being fought over inside Congress right now as to what exactly will be done. They were interestingly joined, these 800 corporations, by Colin Kaepernick, who donated $25,000 of his own money to help the DACA project of getting those people allowed to stay here in the United States. It's an interesting coalition between these corporate leaders and others who feel strongly about it. I wanted to offer an explanation. Immigrants, like those children, or the children of immigrants, have been historically shown to have a very profound ability, or let's put it differently, a willingness to work at wages and under conditions less attractive than those Native Americans normally insist on. In other words, Walmart, Target, and the others, they know something. They know that the children of immigrants have modest expectations, are willing to accept standards of living that others might not. They're also, as the children of immigrants have traditionally been, very eager to be successful in the new country, driven by their parents to be successful, to learn English really well, and to succeed, and to make a really good start in the new country to which they have come, often under very difficult circumstances. In other words, highly motivated and not expensive from a corporate point of view. And it's interesting that they would want to go against the Trump administration, although admittedly doing that is now a popular activity for most Americans one way or another. Before I go on to my next update, I want to remind you that we maintain two websites that are available for you 24/7, no charge ever, where you can partner with us in a variety of ways. You can read more materials of the sort that we cover in this program that we upload onto these two websites every day. You can communicate to us what you like and don't like, what you would like to see us cover. We read every single communication you choose to make, and both websites provide you with a way of doing that. Likewise, both websites allow you to follow us with a click of your mouse on Facebook, Twitter, and Instagram, which we invite you to do. So these two websites are the following: rdwolf with two Fs.com and democracyatwork.info. That's all one word, democracyatwork.info. Use them when you like, where you like, how you like, but they're there to enable you to work with us to get this program's messages to the largest possible number of people. And by the way, if you would like to participate in this program, to see this program as a video event rather than or alongside of a radio event, please know that you can see the video version, the TV version, at patreon.com. That's Patreon, patreon.com, for the TV version, the video version of this program. Let's return. A week ago, the Census Department here in the United States issued a report that got a lot of publicity because it pointed out that over the last 2 years, the level of poverty in the United States has gone down, even though for the last 20 or 30 years it hasn't had that kind of experience, that we have had a rise in the average or median income level of American families. Again, noteworthy because the previous 30 or 40 years have seen stagnation at best and decline at worst. And I even made a comment a week or so ago where I said it is remarkable that you get a lot of attention when the numbers go up a little bit, and you never got that kind of attention over the long decades when it was going down. But I want to highlight another part of the Census Bureau's report because of what it says about the American economy today and where it points into the future. This has to do with children in poverty, because while the poverty rate went down a little bit for most, but not all Americans, the child poverty rates in this country are so extreme that they need to be understood, and the implications of them need to be understood. So let's go. For white Americans, the percentage of children, white children, living in poverty, and let's remember, poverty is a strange idea. In this country, the government keeps a record. Roughly, if you're a family of 4 and you earn less than $24,000 a year, you're considered to be in poverty. Of course, if you make $25,000 a year and you live in most American cities and you're a family of 4, you've got a hard row to hoe. But you're not considered in poverty. So keep that in mind. We're talking about in poverty, meaning living in a family where a typical family of 4 is earning $24,000, and it's reduced, of course, if it's a family of 3 or 2 and so on. White Americans, 11% of our children, 1 in 9 white children, is living in a family defined as in poverty. Asian Americans, 11%, same. And Asian Americans and white Americans. Now let's turn to Native Americans, Black, African Americans, and Hispanic Americans. Let's start with Native Americans' children. 34% are living in poverty, more than 3 times the rate of white and Asian Americans. Blacks, 31%, Hispanic, 27%. Besides these numbers showing a disparity between the poverty endured by children of color, excepting Asian Americans, and whites, besides the jarring implications of all of this for racial justice, for equality, for any notion of justice, let's remember, I'm talking here, and I did this deliberately, about children. So the option of blaming the child for the poverty it lives in is really not available, since the children didn't choose where to be born, to whom to be born, under what conditions to be born. Children were born into poverty, and massively more so among African American, Hispanic American, and Native Americans. Every study that I know indicates that the prospects for those kids doing well in school, doing well in their social adjustments, getting the motivation, getting the time, having the safety, having the supports to make it in life, the odds are much lower because of the poverty into which they are born through no fault of their own. And if you wanted an indicator that we're going to have trouble in the years ahead, if you condemn the children of this society to these kinds of conditions, you are guaranteeing problems galore in the years ahead. This kind of an inequality and this kind of a level of poverty demand a massive intervention of resources and people to once and for all break this pattern. Otherwise, we will continue to see the results of an inequality this stark, imposed from the earliest years of a human being's life in the United States. It is just this side of criminal to have such a situation and to have a government these days, and unfortunately for quite a while, that either doesn't recognize this, doesn't want to face it, or at least does not want to raise and apply the resources needed to do something about this. We're way beyond small measures, piecemeal measures, little reforms. This kind of an imbalance, of an inequality, and of a level of denial to innocent children is something that has to be addressed massively, or else you don't solve it. The next update, I tried to think of a proper heading for it. I came up with "Only in Trump's America," for lack of a better one. The Commodities Futures Trading Commission. You may never have heard this. It's a well-established commission of the United States government in Washington. One of its activities is to supervise the financial markets. That is, the markets in derivatives and other fancy but very important mechanisms of the financial world. The world of banks, what banks do, how they trade with one another, what risks they take, for what kinds of returns, what products they develop in their offices, and so on. And on the 25th of September, this last week, it was announced by them, by the Commodities Futures Trading Commission, that they were changing their policy. They were going to change the policy inherited from the Obama administration to make it suitable for the new Trump administration. And before I tell you what they've done, because it will be right up there in the "you can't be serious" category, before I tell you, it's an important example, I guess that's the word I want, an example of what is happening mostly below the radar. In other words, we have a president who makes a spectacular speech or a spectacular tweet and gets a lot of attention and hoopla and people yelling and screaming for him, against him, and all the rest. But meanwhile, most of the business of government isn't that. It's what is done in these commissions and offices and departments of this or that part of the government, changing the rules, applying them in a different way. That's what's really shifting America. And in a way, that has more impact on people than what the particular head of the government might be saying or yelling or tweeting, etc. As going on everywhere, I want to give you one example. So let's get back. The Commodities Futures Trading Commission. It announced it is now going to rely less on directly supervising the banking industry, excuse me, and I'm now going to quote, it's going to put more reliance on banks, here comes the quote, self-reporting of their own misdeeds. I have to say that again because probably you don't believe what I just said, so I want to say it again. The Commodities Futures Trading Commission, in the words of its chair, is changing its policy to rely more on banks' self-reporting of their own misdeeds. He gave a speech, the director did, in which he said there are a lot of incentives for the banks to be open and transparent about what they do. Folks, you know from this program, if you've been listening, that I have tried to catalog for you over the last several years the extraordinary misdeeds carried out by the large banks in this country. Money laundering, for which they have been found guilty and paid huge fines. Manipulating global interest rates, the so-called LIBOR scandal, for which they have been found guilty and paid fines. Overcharging all kinds of fees, from bounced checks to everything else, for which they have been found guilty and have paid fines. For having misbehaved in the whole mortgage crisis back in 2007, 8, and 9, for which they have been found guilty and they've paid heavy. We have seen and money exchange, the foreign exchange markets, they manipulated those. Everything the major banks have done, they have behaved badly, unethically, and or illegally, paid huge fines, failed to self-report. For the government now to say we're going to rely on self-reporting, it boggles the mind, if I wish I could come up with a better phrase. But it tells you something fundamental, that after all the hoopla is done, this government is doing something for its friends. And if you don't notice it doing much for you, draw your own conclusions. We've come to the end of the first half of this program. Please stay with us. After a very short intermission, we will be right back.